ultimately may lead, if this continues, to the Fed cutting rates at some point. Good afternoon and happy pre-4th of July weekend. We have a ton to cover here this week with a focus on really all of the data that the Fed is watching as they look at policy ahead. I'm Brandon Steele, financial advisor with Mainsail Financial Group, and our goal is to leave you feeling more empowered after every interaction and hopefully share with you every week some of the data, the trends, the market movers that we're watching here week to week. To kick things off, there's a bunch of data from last Friday that I want to highlight. Income, spending, and inflation, but we will also talk a little bit about jobs numbers that we've received this week, and then just kind of tie that to how the Fed might view some of this ahead of what actually is Fed minutes coming up next week. So let's start with last Friday's data, which was really all about the consumer, income, spending, and inflation. Income did come out minus 0.4%. Spending came out down 0.1%. But the big thing to focus on is the inflation data. So inflation PCE numbers showed the headline PCE number was up 0.1%. This was right in line with expectations, nothing surprising here. The core PCE number showed up 0.2%. This was slightly above expectations. The expectations coming into this, generally speaking, were up 0.1. So generally not a whole lot to write home about here, but very, very important as we look at what the Fed might be looking at moving forward. So I'll come back to that here in a little bit. But before I share how the Fed might interpret some of this, we also had jobs data come out this week, and we had kind of the full gamut because of the shorter week. So I'm going to start backwards. We actually had the employment report numbers come out today, which is typically a Friday data point. And we had ADP employment report come out yesterday. So the reason I'm highlighting that first is because we've talked about this ADP employment report being a little bit maybe off, although let's just say very different from the employment report that we get each week or each month, excuse me. So the ADP employment report on Wednesday, just yesterday, shows actually minus 33,000 jobs. But as we've kind of talked about, again, this has been flawed in the past and been very different from the employment report. Both of them have their challenges, don't get me wrong. But we did get the employment report early this week, and that shows that we actually added 147,000 jobs. We also, on Tuesday, had job openings at about 7.8 million. So to summarize all the jobs data, I think the general takeaway is, although the Fed is kind of considering it a strong labor market still, the employment report would suggest that the job openings and job openings would as well, but the ADP employment report may not quite as much. So a little bit conflicting on the jobs side of things is maybe the best way to put it. Now, what I want to highlight is that the Fed last meeting basically shared that they feel like labor market is strong, and the big thing that they're focused on is inflation as the kind of primary focus. So unless the labor market changes, again, we need to keep an eye on that. So don't take this as meaning we have nothing to worry about there. But really, it sounded like the Fed is primarily focused on inflation. And so I wanted to highlight that for a minute. Again, we did have the headline number up 0.1%, right in line with expectations, core up 0.2%. So the reason I'm highlighting that is the Fed continues to talk about the pressure that we may see on inflation and the risk to the upside. I think that's a fair assessment. We need to be careful of that and watch it closely. But I think that for a while now, we've seen inflation kind of continue to tick down. Now, we'll see as time goes on. There's this conversation of how the tariffs may impact things, and we might see that. But, it's been some time. We're here in July. There's basically, I think the Fed had shared June, July, and August is where they might expect to see some of these impacts. So this is kind of the June numbers that we're getting now. We'll continue to watch this as we get further into the summer. But at this stage anyways, those numbers really not a whole lot to write home about, which ultimately may lead, if this continues, to the Fed cutting rates at some point. Now, again, they are very concerned about inflation picking back up. So they're probably going to watch this very closely. One data point is not going to be enough, but we'll continue to watch how that data plays out through the course of the summer. And then this is a good segue into what to kind of watch for next week. So just as a heads up, markets are closed tomorrow for the holiday. We also have a short day today on Thursday for the markets. But coming up next Wednesday, we actually get the Fed minutes from the most recent meeting. So that will be very interesting to see just how generally the Fed members are viewing inflation and what they're watching ahead versus just the takeaways, obviously, that we get in the press conference. So be sure to tune in next Thursday at 3. We'll break apart some of those Fed minutes. In the meantime, have a great upcoming holiday weekend, and we'll see you next Thursday at 3.